To build anything that truly lasts, it takes time.
Then we've got Amar Singh joining in on the show right now to talk about his observation on the charts, and Tapan Doshi as well is there. And Amar, let's start off with the house call. Angel won the buzzer today, but what's the reading on the charts?
Yeah, I would say that there are two stocks I would like to talk about. One is Hindustan Copper. So if you look at this stock, the stock has been on a rally, and from almost 200 levels, it is up by almost 40%. And then we witnessed some sort of correction from 300 levels. Currently, it's around 275 to 77. If you look at the structure of the stock from a medium-term, long-term perspective, that continues to be very strong and firm. So this is one stock one can look at from a short-term perspective, buying at the current levels for an upside target of 297 and a stop loss of 257. And the second stock to look at is Dalmia Bharat. I would say it's been quite volatile today, but overall the structure of the stock is quite positive. On the intermediate term trend, some of the technical indicators, they are pointing towards some sort of consolidation and an up move. So this is one stock one can look at. So buying around towards 2300 odd levels, it has moved up significantly from those levels. So any pullback is a buying opportunity for an upside target of 2477 and a stop loss of 2177.
All right, so those are the stocks that Amar is liking at this point in time. But Tapan, what about you? Any particular stock that is making to your list?
Well, looking at the current scenario, the way the results are there, no, I think NBFC may be a better option, or banks may be a better option, because what you see in the HDFC Bank, ICICI Bank has delivered good results. So I think some mid-cap banks like Karur Vysya Bank or Federal Bank, one can keep in mind. There, no, I think the credit growth will be good enough, and also no, the NPAs are in control, and the management commentary is quite positive there. Even in NBFC, some of like LIC Housing Finance, one should keep in mind, because no, NBFC, the cost of funding is going down, and of course being in housing finance, no, I think their collateral is quite it's very protective, so NPS comes less. So I think LIC housing finance also plays good from here. So both banks and NBFC, I think it may do well for next few quarters, so one should keep an eye in that segment also.
Right, okay, that's the take coming in right now on some of the buzzing names. Eternal and Naukri, they are the ones which are, of course, holding up very, very smartly. Amar, what's your reading on the charts then for both Eternal as well as Naukri? Eternal, of course, has had a block deal too, and it's a solid earnings reaction. But do you sense that Eternal will continue to cling on to near about life highs? And what about Naukri?
Yeah, I would say that if you look at Eternal definitely has on a roll from it's up by almost 50% from its recent lows in the first week of April, from sub 200 levels. It's around 300. If we go back in time, we see that earlier it had made a high of 304, 305, and that has been taken out today. Currently, it's trading around the 300 mark. Looking at the structure of the stock, it's very strong and firm. So I would say this is again one stock. Any pullback is a buying opportunity. The stock has now got good support somewhere around the 272, 265, 270 zone. That should act as a very strong support zone. But the stock is definitely a buy on any correction. And looking at the other stock which you mentioned, Info Edge, if I look at, see, this stock is in for consolidation, because if I look at the charts from a medium-term perspective as well as a long-term perspective, clearly shows that it's in for consolidation. On the upside, it's around 1550. On the downside, somewhere around 1300 odd levels. So it's more of a range play, very good from a range trading perspective. But on the upside, till it does not reach the 1500, 1550 level consistently, we could see some sort of consolidation above that level. Then the stock is definitely headed higher towards the 1700 level. So that's a level to watch out for.
Right, okay, that's that on both Zomato as well as, Info Edge, their erstwhile names. But let's also address the drags today. And Reliance loses some more. You've got a Kotak, you've got a Bharti. These are some of the blue chips which are under pressure. And Infi, ahead of its earnings, is also down about almost 0.7% as we speak right now. Tapan, what's been your reading on the charts? Let's address some of these laggards. And I want to talk about how much more drag do you sense one could see on Reliance?
See, first of all, no, I'll not able to speak on technicals. I'll more speak on the fundamentals. So talking about fundamentals, I think Reliance, of course, the result was mixed bag. And if you see their main segment, there is Geo perform very well. And I think that will do well because what I feel that ARPU, which has given quarter by quarter around 208 rupees, no, which may go up from here also. And again, the way they are investing, no, I think the 5G is doing very well. So I think there the margin may go up from here. Other segment like O2C and retail, of course, they have given a mixed bag result, but then also retail division is having a very, very good growth prospects from here. And I think energy to retail maybe 12 to 15% there also the growth will be there. So Geo ARPU maybe around you can say 13% growth will be there. And if you see the price hike is going to come around the year end, nearby year end. So this will help Reliance as a whole. Again, then new segment, energy segment. I think green energy segment, no, there the updates whatever coming are quite encouraging. So looking at all that, and of course in future when the Geo demerger will happen, and of course that the Reliance retail demerger will happen, I think that will be a value unlocking. So Reliance as a stock now one should invest at this level or at a lower level. I think it has a good prospect for next 1 to 2 years.
All right, so that's about Reliance, but the other stock that is on the up move today is actually Paytm, and just ahead of the earnings, we have seen good moves coming in. And Amar, what do you make out of Paytm? Because we have seen that stock too surpassing that 1,000 level for itself and breaking above its previous highs. How do you see the stock up move from these levels?
Yeah, I would say that Paytm definitely the structure of the stock is quite strong and positive. If I look at on the long term or the intermediate term trend. And if we go back in time, I would say the last quarter of last year, the stock had made a high of almost 1,062, and from there it had corrected all the way towards 650. Now again, it's inching toward that level 1,060, 1,070. That should act as a zone of support, zone of resistance for the stock. But if you look at the structure of the stock, definitely this is one stock on any dip, it is a buying opportunity. If I look at what the levels are, somewhere around 970, 980, that should act as a zone of immediate support because that was the earlier top from where the stock had corrected. That was in the second week of June from where the stock had corrected towards the 850 level. So I would say the stock is definitely positive on the charts and also sustaining about 1,060, 1,070, then the stock is definitely headed significantly higher than we could witness a 10% rally also in the stock in the next couple of months.
In fact, let me bring on board a researcher as well and talk about Paytm too. Can we? Okay, we'll take it across to Varun in just a bit and talk about Paytm. But just addressing some of the other laggards today, Oberoi Realty, of course, is an earnings reaction, and that stock is lower by about 2%. There's 361, wherein I think there has been a block deal as well. That stock down by about 5%. Voltas, of course, is down 2.5%. And you've got Crompton and LT Finance as well, which are also laggards in trade as we speak right now. So that's pretty much it when it comes to, some of the laggards in trade right now. But Tapan, I want you to analyze the charts of Havells because that's also seeing an earnings reaction. Given that wires and cable segment reported a good set of numbers, but the volume and value growth in this segment is what I guess has disappointed. And you can see the stock is down as well. What do you now read?
See, talking about Havells India now from the fundamental point of view, if you see this, result was not so great. I agree with you totally. And again, there is a disappointing result on the cables and wires point of view. Also, little bit of margin problem is there. of course, the revenue is up, but the problem which remains is here is the no EBITDA margin is declining almost 40 basis points. So that is quite a fall, and revenue is 6% fall. Now the problem is no, the competition is too good here, and also no, one of the caveat, of course, it will come in a long term angle that Adani and also Birla is entering this sector, and see electric goods demand will be there around 8 to 10%, of course. And if you see the revenue pattern and all that, whatever of Havells is not matching with the way the demand is there. That means somewhere it is laggard. And overall, if you see the polycap is comparatively doing quite well. So I feel that no, here Havells has to reinvent itself. No, the mainly the revenue part, no, it's not encouraging. And overall, I'm quite disappointed with the results. So I think one should avoid. I think there are better stocks available in the wires and cables, particularly polycap. One can look at if they want to go for a medium term angle.
All right, so that's the day coming in on some of these cable and wires companies. But Amar, let's talk about the pharma space overall, because on the index front, we have seen a bit of a decline in today's trading session. But barring some of those CDMO plays, some of those mid and small cap pharma names, if I look at the large cap generic players, be it Aurobindo, Lupin, Cipla, they have been reeling under pressure for quite some time now. Give us your own sense that do you believe that these stocks can continue to underperform in the near term as well?
So first talking about Aurobindo Pharmacy, Aurobindo Pharma, clearly the structure of the stock isn't promising at all. That's very evident if you look at the intermediate and the long-term chart. So it clearly points towards more of consolidation. So if I look at Aurobindo Pharma on the intermediate term trend, 1,000 and somewhere around 1,300, that's a range for the stock. Higher levels are being sold into. It is trying to form a base. If I look at the longer term charts, clearly shows that it's in oversold territory, but there's not much of steam in the stock or not much of positive fundamental triggers that's really helping the stock. That's one. Looking at Cipla, I would say Cipla also has a similar structure as Aurobindo Pharma. Again, on the long-term charts, extremely weak. Intermediate term trend completely flat. So if I look at the levels for Cipla, somewhere on the downside towards 1350, 1360, on the upside 1550, 1560. So it's majorly a 200 point range for both of these stocks, and higher levels are being sold and there is pressure. If I look at the shorter term charts, they are definitely under pressure. What seems to be the case for both these stocks.
Sure. Sectorally, one can see that it's actually the metals, the energy, and PSU banks which are the ones which are holding out. And on the flip side, the weakness is for pharma, IT, auto, and FMCG, along with realty. They are the ones which are the sectoral laggards in trade right now as we speak. Tapan, what is your own sense on how the earnings from the metal segment as well as PSU banks is going to play out in light of what we've seen from some of the large, private banks, even the smaller ones for that matter?
See, talking about PSU banks, now they have an edge here, no, because of interest rate cut. Of course, now that pass on has not happened totally, but you know that PSU banks will be the first one to pass on to the customer. But yes, I think the credit growth should be good compared to earlier quarters, especially the larger banks like SBI and Bob. And of course, their prospects are much more better. Even PNB, I can talk about. See, overall, PSU sector is in much more better shape, and I think their NPA is still on no control part. And of course, credit growth, I think it will be around 15 to 20% in next 1 or 2 quarters. Of course, we have to see whether everything is priced in this quarter or not, because it's a laggard effect, so it may come in the next quarter. But overall, I'm quite positive that PSU stocks may give a better result this time. So yeah, one should be positive, and I think one should wait for the result before taking any call. And talking about metals, yes, metals also, if you see the steel demand is quite good domestically, 9 to 10% around. Of course, government is putting all that anti-dumping duty in order to safeguard the steel industry. But China, there are some talk every day coming, and that is actually pushing the metal sector up. If you see aluminum also, there also demand is quite good. So there, I think steel and aluminum, one can look at it, and especially I think JSW steel result was quite okay only. I think Hindalco may be also coming good. So I think metal also will be the, it will be okay type result this time.
As the take coming in on the metal counters, but Tapan also talk to us about the chemical space, because of late all these chemical counters and especially the agrochemical players have been on the up move. We have already seen the numbers from Reliance, which were indeed good, but anything particular that you will be looking for when it comes to the chemical plays, and any particular stock that you wish to flag off?
See, I'm quite positive on agrochemical sector. Now, if you see there, most of their revenues jumped around almost 30 to 40%. I think Rallies India was an excellent result. Even there are another stock. If you are asking me, then my pick will be Deepak Fertilizer and Petrochemical. There also, I feel there also there will be a good jump. And agrochemical, because of good monsoon and lower inflation, I think there will be a good few quarters from here also. So agrochemical is the place to be in. I think bulk chemical and specialty chemicals still they will struggle, because now the big elephant in the room, that is China. No, you know that no, they may do a dumping across the countries, and then our export may be impacted. So I think specialty chemical, bulk chemical, I'm not too positive. But agrochemical, I think because it's a domestic, and of course there is an export, I am not denying that, but I think then also agrochemical is much more better place compared to other two.
Right, okay. Amar as well as Tapan, both of you, thank you so much for your time today. Good to be speaking with you. We're going to take a very quick break.